Hello, my name is Kieran. I'm the Head of Aviation Advisory for KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to welcome Mark Hughes to the session. Mark is the Chief Commercial Officer of Falko, and he's here today in conjunction with our Leaders Report for 2025. We are recording this in early November 2024 in Singapore. Mark, thank you so much for joining us.
Pleasure.
And maybe you might take a minute or two just to tell people a little bit about Falko.
Absolutely. So I was part of the founding management team of Falko in 2011 when we bought what was BAE Systems aircraft leasing business. That was about 144 aircraft, all previously manufactured by BAE. And since then we have developed and grown that business through to today. We have almost 300 aircraft in our portfolio. We are now the world's largest lessor focused on the smaller aircraft space. We only own aircraft between 70 and 150 seats. We don't try and compete in the more competitive narrow body space. And really the strength of the business over the last 12, 13 years has been in used aircraft. So we're very strong in mid-life and later life aircraft. We do own new. We have done new aircraft as well. But used aircraft is really the strength of the company.
Thank you. And as we get into the questions now, if that's okay, like one of the things we ask people about is kind of, what do you think the demand environment is like? How does that split out geography? And, do you have general economic concerns or airline operating concerns? And you've clearly a very broad base of airline customers. You've circa 40 customers. So clearly you have a good view of this across the globe.
So we do. So we cover customers everywhere from Australia through Asia, Africa, Europe, South America, North America. We don't have any exposure in China or Russia, but we've got a pretty good understanding of all those markets. I would say that the demand environment or aircraft ownership today, the demand for aircraft is as good as it has been in a very long time, if not the best that I've seen during my career. There's fundamentally a shortage of aircraft. There is excess demand for aircraft over the supply of aircraft. And as an aircraft owner, that generally works out quite well. So we're seeing that globally. We're seeing strength in all markets. I don't think you would say there's any one region is materially stronger than others. They all have their own characteristics, and I think that those work through in a similar way. And on the macroeconomic side, we work in aviation. It's the unknown is always the next big thing. So we're always concerned about what might be round the corner. We've started to see oil prices rising a little bit recently. We've been through a fairly significant interest rate rise. Hopefully that's now starting to move in the other direction. But whilst we're in a strong demand environment, we're very aware that can change quickly based on global economic circumstances.
And one of the things you mentioned there clearly was supply. And obviously there's lots of OEM challenges, supply chain challenges. I suppose, how do you see that impacting for the OEMs you're working with?
So, as I mentioned in the introduction, we are largely used aircraft. We don't have speculative orders. That's a decision that we've made. I don't rule it out, but at this stage, that's not something we do. So to some extent, those OEM challenges have flowed through to the benefit of used aircraft. Yeah. So we're seeing a lot of maturing leases, those airlines extending leases or looking to keep those aircraft. And even though we generally own smaller aircraft and the production issues are probably on larger aircraft, it still affects the whole market in a similar sort of way. So we've benefited to some extent from some of those challenges. But we also own a lot of engines, we own a lot of aircraft. We see MRO capacity issues, we see overhaul times on engines as being big issues, landing gear overhaul times. These are all things that affect all of us. So whilst we're not faced with some of the challenges you would have if you are taking new aircraft from OEMs right now, we're not immune to some of the knock-on of that as well.
And in that you mentioned lease rate factors and lease rate extensions or lease extensions. How are you seeing the lease rates evolving in the market for you or in the sector in general? And also then kind of that, how has that lease extension piece changed in the last couple of years?
So I'll take the second bit first. So we've seen a material shift in the last couple of years on lease extensions in the time frame that airlines are making that decision. So historically, on smaller aircraft, you would expect the decision period for the airline to be no more than 12 months and probably more like 6 to 9 months as where they would start to make a decision around what happens to that aircraft. We're seeing that pushed out to 18, 24 months now. So we've got lease expiries in 2026 where already airlines are saying we're going to be keeping those aircraft, we'd like to talk about extension. So that's quite a significant shift. And I think that's possibly because a lot of those airlines also have larger aircraft, and that's a similar time frame that's required on those, so they're managing their fleets in a consistent way. We've definitely seen a benefit on the pricing side as well in the last couple of years. Obviously, through the pandemic, there was an unusual market that had a pretty dramatic impact, and we saw lease rates being quite negatively affected there, but we've seen very strong recovery. And again, across all aircraft types, across all aircraft vintages, the economic theory is quite simple, where you have supply which is pretty much fixed, and you've got increasing demand or excess demand, then generally it moves price. And we're starting to see that through. There's maybe a little bit comes from rising interest rates over the last couple of years as well. It takes a bit of time to work through, but I think it's more just the excess demand over supply that is driving those rates up. And
I suppose, how does that apply? You've mentioned you do a lot in the mid-life space, and during the year you bought 11 aircraft from NAC, so good sized portfolio, I think. So how have you seen that secondary trading market in the last 12 months, and where do you think that might go for the next while?
So our business model is a trading model. So if you look over the period since 2011, we've bought something in and around 500 aircraft, and we've sold well over 200 aircraft along the way. So I'm not sure you'd find anyone in our space that's probably more active both buying and selling. That market is also pretty good just now. We don't have quite the level of liquidity that you would see if you're trading 320s, 737s, but we do see recurring demand. We see capital coming into the market on a regular basis, and we're able to access that or work with that pretty much because we've got a large portfolio. But the business strategy is very much to deploy capital through acquisitions, to manage those assets, and to realise that capital back for investors as and when we can through that investment cycle.
And as we just move a little bit, you mentioned interest rates. Clearly we had a couple of years of very high interest rates in terms of that increase, but that seems to have steadied and slowed. Clearly we're seeing central banks do some rate cuts. Has that changed how you're thinking about financing over the next while?
I don't think it's necessarily changed how we think about financing. It's had an impact perhaps on some of the sources of finance. So probably things like capital markets have, for various reasons, but I think that just the pricing angle has had a bit of an impact there. I would say, generally speaking, the financiers that we talk to are a little bit more sophisticated in terms of aircraft finance. Generally, they are the people who have fairly big teams. They've spent a lot of time investing in smaller aircraft. They understand the market. So we've seen them remain active and work with us. So we haven't seen a noticeable shift. And in fact, we've certainly seen in the last, I'd say 12, 18 months, a lot more interest and a lot more banks coming forward to look at working with us as well. So it's been a little bit of a mixed picture, but generally we feel fairly confident. We haven't had any issues in terms of what we need to finance, refinance along the way. It's been fine.
And you mentioned additional banks. Like, are you also seeing alternative lenders, that kind of stuff? And have you any thoughts about capital markets and ABS?
So we've done an ABS. So we did one in 2021, which has performed very well. We would be seriously looking at those markets again in 2025 and beyond, to the extent they remain active. We've seen a lot of issuance in the last few months, and it's all pretty positive. So I think, again, if that interest rate trajectory remains downward, that's going to be an interesting place to be. We do talk to some of the alternative lenders. I think up till now, we haven't really needed to go too far with that because we've done well working with the relationship banks that we have. And I would say generally in our part of the market, we're probably not using quite as much leverage as you might see in some of the narrow body deals. Lease rate factors are a little bit higher. There's maybe a little bit more cash flow, so we can potentially fit more easily into some of the bank models, and we can make that debt work without having to push things too far and perhaps need access to some of the alternative money.
We might talk a little bit about investors. So clearly Falko has changed ownership a couple of times, and most recently I think Chorus are moving, and you're moving to HBS. So how have you found it in terms of different type of investors looking at you, and also how do these investors think about aviation asset as a class versus other classes?
So you're right, we've been through 2 changes of ownership in 3 years. What has been interesting has been the breadth of interest we've seen from a broad number of investors. So some of that has come from fairly traditional lessors, perhaps looking to expand or develop their business into the smaller aircraft side of things, but a lot of it has been hedge funds, for want of a better word, or large asset managers looking to deploy capital into aviation. And I think they see the smaller aircraft space as being one where perhaps they can achieve returns at levels or more easily at the level they'd like to see compared to the narrow body space. We've certainly seen a shift since the pandemic, and one of the interesting things about that was how domestic air travel was fundamentally different to international air travel. So very few countries imposed any domestic travel restrictions. If you look at our business, if you look at our portfolio, and if you assume Europe, for want of a better word, is a domestic market, it's not, but look at it that way, then over 90% of the aircraft we have, well over 90%, fly domestically. So that hit the radars of a number of investors who saw that there is a part of the market that behaves slightly differently. And actually during the worst shock that the industry has seen, actually demonstrated an element of downside protection compared to a lot of the international traffic, which just disappeared. So when people started looking at our part of the market, they started to see it more as a domestic focused part of the business rather than something else. And that has proved quite interesting and has brought a different dimension in terms of interest than we'd perhaps seen previously. So that was certainly behind a number of people who expressed an interest in our business in whether it was 2021 or 2024, who we might not have expected to see that. previously.
And when you're going through that work with them, was environmental factors anything, the environment, ESG, did that come up much in the conversation? Are they thinking about it as they look at investments?
It's certainly there, but it doesn't seem to be, or certainly from our experience, wasn't one of the major factors. Yeah. Now, partly we're fortunate. We own a large number of turboprops, which are some of the most fuel-efficient aircraft flying. There's no new technology to replace those. So they, to some extent, fit the bill already in that regard. I think where there is interest, and certainly where we've spent a lot of time recently, is that we recognise that new technology or brand new technology, whether that's electric power, hydrogen power, hybrid technologies, whatever, are going to feature on smaller aircraft before they ever feature on larger aircraft. So our market is probably a little bit more exposed to that, although what we're seeing just now in terms of credible technology, it's sub 10 seats really in terms of aircraft. So you're looking at all electric is 6 seats, hydrogen's 9 seats. It's a long way to get to 70 seats in any time soon. So there are considerations, but it's not a big part of that investor focus.
And so clearly you obviously have a unique M&A insight at the moment. Do you expect more M&A to continue in the next 12 months? And you've obviously become the largest kind of player in that space. Do you think that scale is important, and will that drive some of that M&A?
So I think scale is important, and I think scale is important when you own lower value assets. So you need to own more of them to be able to support the platform and the operational capabilities that you really need to be successful. So there's definitely a benefit from scale. I don't know what the number is in terms of how many aircraft you would have, but certainly where we're up, north of 250, you're definitely seeing a lot of those benefits. And I think if you speak to other people in the sector, they would probably say the same. On a consolidation side, I just think it's part of the way the industry operates. Yeah. I think you have a lot of institutional investors or people behind businesses who are there to invest, grow, and then divest, and that therefore will drive or require an element of M&A just for those people to achieve what they're looking to achieve. And it's certainly it's much easier to acquire growth than it is to do it organically in our market as well. It's hard work adding aircraft transactionally, deal by deal by deal. It's much easier to buy scale along the way. So again, it kind of seems to feature or fit as a feature of how the industry operates.
Very good. And so, Mark, we typically finish with the same question in every year in these sessions. So, looking out over the next 12 months, what's your optimism level like?
So I think it comes back to that supply and demand dynamic. We don't really see anything changing dramatically in that. We feel that there will probably still be an excess of demand over supply through 2025. We would anticipate some of those problems improving. I think you've seen quite unique circumstances in Boeing this year that you wouldn't expect to happen again in next year. So you would expect to see more aircraft coming out of those production facilities. We would expect some of the engine problems to be resolving and to working their way through. So it's probably becoming more balanced, but we probably see the demand side still being better. But it's just aviation, so you never know exactly what might happen, and I'm sure there'll be a few surprises for everyone along the way.
Absolutely. So Mark, thank you very much for your time, and especially thank you for your insights both in the sector and into Falko, which is a fantastic business. So thank you.
Thank you very much.